Now when we say credit insurance, Madam Insurance don't talk am. Maybe you won't hear my voice. Somebody when they sell something, you know, say you they sell for credit, people go buy, they no go pay. They buy, they no go pay. So after some time, some of them no go agree pay. Now him be the main thing, credit insurance they cover. But it gets some technical aspect when they're important, because insurance no they pay for certainty. Now something when be uncertain, now him will they pay. So what I mean here be say, when we they talk of credit insurance, the person when no pay go get reason. Supposing somebody buy things from you, he gets one promo when once supermarket here for Lagos do one time. They say people come buy TV, come buy laptop and all those things. And if you see the people when buy, they will say you they work. You say yes. They give you the contact where you they work. You carry the TV, they pay small. Supposing the person when buy the TV, maybe end up pay, let's say the TV and buy them for 50,000. In don't pay 20,000. In can't die. And now the company they pay. You discover say the company no go fit pay. They no go use salary. Dead person no they collect salary. Or the person get accident, they disabled. Because of the disability, he no go fit pay. Now that type of risk, now him credit insurance, they protect. Maybe say somebody come, you they sell. Immediately the person buy goods from you. You just go, you say bye-bye. And you now say, okay, make you go, you after all get insurance. No be waiting credit. The risk go there uncertain. No be something when the person don't plan. And there are two ways. You know, some people when they sell market, if you get one individual, when they buy on credit, and they can't feel, say, the risk of that individual feel they high. If you buy credit insurance on the head of the person. Or the person when they sell market, if you buy credit insurance on all the people when they buy credit from him. Let's say 200 people they buy. So you now buy collective policies to cover all of them. So supposing any of them no fee pay because of waiting that person no plan for, the insurance company go pay on behalf of that person. Now two ways.
Okay.
For the big people, when they sell to people when you feel track, they feel buy credit insurance from conventional insurance. When I say conventional, the normal insurance companies.
Okay.
That one fine. The person when you want sell, you know the source of income. So that what you they cover now the risk where if the person no fit pay because of an accidental happening. Then for the people when they sell small markets, they feel buy credit insurance through micro insurance. And their own even fine. Because for micro insurance, that one no they say once you don't buy them and the person no fee pay or ain't run away, micro insurance, if the company give you cover, go pay. You know, go start looking at all this accidental happening. Say the person motor jam him, he break leg, or the person die. Now the difference between micro insurance and the normal
insurance.
Yes. The first thing when they important for credit insurance now documentation.
Okay.
Invoice. You know, say now where credit insurance safe now normally now for the conventional market, those big people, you go see how the default level, where they say the risk exposure there. If the default they high, it then means that when an insurance company won't give you cover, the premium when they go give you go there higher than if most of the clients when they buy from you, they know the default easily. We will look at the percentage now. Somebody they sell market for credit, and over 80% of the people when you sell pay. Now good business. But
okay.
if you now go through the documents, you discover say more than 60%. If you like say the person no do him work, you get what thing with the call risk management. No be everybody when come you go sell on credit too. So you go don't do where they work, where your salary, how can we get the distance? Get paper from your office. Then they confirm from the office, say this man they work with us. They confirm from the office, say okay, if you give him on credit, we go they pay from, we go they deduct from your salary. How did they pay?
Okay.
Because now him make I say documentation, the invoice. If you look at the distance the person buy, e no go pay until when e wan buy another one. E don dey give you signal say this person no be good customer, and if you place the person on credit insurance, to default dey easy. So the cash flow dey help to determine how you go give am cover, and that same go help to determine the premium. But another thing we go note here, credit insurance no dey popular in Nigeria unlike outside. Why e no dey popular na because of attitude. Outside, if somebody buy on credit, you no go even begin check how you go pay. But some people, if they buy on credit, they go say they don't collect part of government money. So discover say even credit bond, credit, anything credit here, you know they're popular. Before an insurance company go gree give you, they will know say you na strong business person when no go just sell anyhow. Because when you sell normal to an average person, quote and unquote, the person go come with reason. Normally, under normal this thing, they're supposed to say, before we give you, make you get life insurance.
Okay.
But the kind of thing when we this, here, so many things abnormal, they happen. Because most people go borrow the money, they no go pay back. So how they go recover? I even noticed one, they will start sending text message, this person is a bad person, this person. But if you get some kind of collateral, you run the design you borrow. If you are borrowing 10 naira, they arrange with an insurance company, say, make you give us cover for anybody when borrow. If the person default, you pay the 10 naira. The insurance company, if you say, okay, add 2 naira as premium. So the person, the total money go pay now 12 naira.
Okay.
It will help them protect the risk of default. Normally, insurance, they say, you get insurance when you can pay for. Okay. If you don't expand the risk, something like we say all risk,
okay,
insurance go give you, but the premium when you go pay go there high.
Okay.
Because when you start getting in the portfolio, if the person no fit pay, it then means that the risk when the insurance company they carry don't increase. And most times also, human beings, immediately the person know. Now somebody when they work there go say, oh God, this thing when they pay, make you stop and draw, I will go collect from insurance.
Okay.
We don't see those type of attitude. Now make I say outside, credit insurance perfect. Outside, most things safe now credit, they run on. They support this thing when they get now the insurance. Somebody when they buy this thing, no say there is one backup. The backup the insurance. That person when they sell those things for you on credit, they back them up. But here, the credit risk level they too high. When you sell on credit without insurance, to pay na wahala. Not to talk of when you can't get where you fit collect, even if you no collect 100%. And another thing when you know, most times, to make the company to be serious, supposing they owe you 80,000, insurance no go pay 80,000. Insurance may decide on the policy saying that 75% of the debt. So it go make you so you dey conscious to work to go collect the money because you no go get everything. If you collect your money back, let's say you collect 500,000. Now the law say you go refund that one when the insurance. See, for insurance, they're supposed to make profit from your loss. That's one of the principles of insurance. If you lose money, now that money when you lose, you go get. But if you go outside and can't get them, you get what they call principle of subrogation. You go collect them, take that one, and return the one when insurance don't pay you, so you won't make profit. Let's say they pay you 450, you lose 500, you now collect 500. But where we are saying is where that person can be identified. If the person cannot be identified, I don't know who you collected from. But if I look at your credit portfolio, I discover, let's say you have blanket cover. At the end of the year, you said people when they owe you credit now 1 million. 6 months later, when we did analysis, maybe during renewal or reconciliation, we now discovered that out of the 2 million went there outside, 600 don't come in. It then means that you have gotten some money.
Okay.
So if you can't make profit, you lost 1 million, you have been paid 850,000, and now you have gotten 600,000. If you add 850 to 600,000, the person don't make profit now. Where did they do credit insurance?
Yes.
Documentation, reconciliations are very, very important.
Okay.
Then honesty, transparency, they're important. These are the key things for you to do credit insurance. And these are the key things why credit insurance fit no work for Nigeria. For bank loan, most times if you want collect loan from bank go say make you go buy insurance,
Okay.
make them the beneficiary.
Okay.
Or you get insurance, you will now ask the insurance company, say make the right on it. They use the word assignment, the technical term. Assign the proceed to the bank. The interest of the bank go dey noted. Credit own be say they sell. I don't tell you. Now me when they sell, know the kind of risk. Say my credit portfolio dey rise. Formerly this thing at 5%, it don't reach 20%. See if I no take care, this thing fit sink my business, all my profits don't go. Now me go now work to an insurance company where credit insurance work. We know they sell. Now very few, because the time when I talk safe, now that time I don't want to mention the name of the supermarket when say I begin do this thing. So when some of us do some little findings, we discover that they got arrangement with some insurance company where
Okay.
For default, if you see the thing when you are paying, they will equally state there say 1% insurance, which means 1% of that amount of credit, they will add it to it, which they will pass to an insurance company. Because you go see, if you look at the invoice, the thing be say most times when people they buy things, they know they look. They don't put the cost of the goods. Put the deposit when you, let's say the cost of the goods now, 100,000. They put them less 10,000 when you pay, because if you remember that time, they will say you will pay something.
Yes.
So less that thing the person pay. The balance, they put the amount. Then 1% of that balance. That 1% of the balance, you will see they put insurance. Putting insurance is now for you to know, say, now premium when you they pay to the insurance company. They add everything together as what they will be deducting from you until when
you don't pay the
loan
finish.
yes. The year ending, now two different things.
Okay.
Insurance policy get duration.
Okay.
But claim can happen anytime in between the duration.
Okay.
Agreed, the person buy goods, they pay, let's say they pay instrumental. Not be say you buy goods, you just give and carry everything. The person go down suppose pay some part. And the person they're supposed to pay maybe an installment or the balance on June. That June, income fall sick, or in day disabled, or in die. You notify the insurance company.
Okay.
Once they carry the investigation, confirm, say actually why this person no fee pay now because of this reason. And that reason when make a no pay, they inside the policy. The insurance company go pay now.
So for those who always did that micro insurance space, how they fit take arrange
You see,
for their
micro
business?
insurance, one good thing with am be say, unlike the other insurance when we get, where you they say exclusion, they cover this and language, grammar. Micro insurance no get so much grammar.
Okay.
So any micro insurance company when get hurt saying go do am, once you don't tell and say sell. And another thing I keep on saying, documentation. If you they do this thing, get registered. You know if you do some of this thing when you no get documentation. Ordinary size book, you and the insurance company go see. You put date, put the person, he paid this amount remaining. So you can easily say, yes, no be say I sell tomato 5,000. Tomorrow, no evidence. You know, see if you write 5,000 on the first day, another day even if you utter and sef that one we no go we go say alteration God don catch you but the one when you use their head dey talk e dey difficult to verify. So things when do the most important thing as we dey talk this micro insurance whether you wan buy fire anything try do some documentation. E dey very very important. No be say you go we no say get receipt for tomatoes. Now no nah, but use a size book. Those people when they if you want to enter because insurance na formal contract if you want to enter into this thing.
Okay.
Because the micro insurance no go come they don I say credit to the woman don run away and the insurance company go equally say okay where they live. If you say pack out I wan go there say this person in dey live here they say e no live there e don tell me say something dey wrong.